Right now, as you are watching this video, a countdown is running. Not a countdown that someone invented to get your attention. A real, documented, geopolitically driven timeline that is playing out across oil markets, central bank war rooms, and commodity trading floors around the world as we speak, and the window it is opening for. Silver investors is one that history tells us does not stay open long, so stay with me for the next few minutes, because what I am about to walk you through is happening today, right now, and the decisions you make or do not make in the next 72 hours are going to look very different in the rearview mirror just a few weeks from now. Welcome to Money Insights. If you are new here, hit subscribe and give this video a like right now, because today we are covering breaking financial intelligence that directly connects what is happening in the Middle East this very moment to the silver in your safe or on your watch list. We exist to help everyday Americans understand what the biggest macro moves in the world mean for their personal wealth, and today's video is one of the most time-sensitive things we have ever put out. Let us get straight into it. Here is what happened in the last 24 hours. The United States military officially launched a naval blockade of the Strait of Hormuz. The Pentagon confirmed that in the very first day of that blockade, not a single ship made it through and 6 merchant vessels were turned back. Let that land for a moment, one of the most critical waterways on the entire planet, the passage through which roughly 20% of the world's daily oil supply flows, is now under active U.S. military enforcement. This is not a threat. This is not a warning shot. The blockade is live, and day one proved that the U.S. military means exactly what it said. At the same time, Iran rejected the American proposal to suspend all nuclear activity for 20 years. Talks in Pakistan over the weekend collapsed completely. Vice President Vance publicly admitted that negotiations stalled because President Trump is holding out for a grand bargain rather than a small deal, and then China's defense minister issued a statement that stopped just short of a declaration of military intent, saying directly that the Strait of Hormuz is open to China and warning the United States not to interfere with Chinese vessels. That is not diplomatic language. That is a military posture being stated publicly by one of the most powerful defense officials on Earth. So let us be precise about where the world stands right now. The blockade is active. Iran has rejected the nuclear proposal. China has issued a direct public warning. The IMF released its World Economic Outlook today and cut global growth forecasts, specifically citing the Middle East conflict and surging energy costs as the primary cause. Oil is trading at $91 for WTI and $95 for Brent after touching triple digits just weeks ago. And silver, which has been building a powerful fundamental case for months, is sitting at a price that people are going to look back on with disbelief if the next 72 hours unfold the way the evidence strongly suggests they might. That is why we are calling this the 72-hour window. Not because the world ends in 3 days, not because silver is guaranteed to explode by Thursday, but because the next 72 hours contain a series of specific decision points and events that are going to force resolution on a situation that markets have been pricing with deep uncertainty. And when uncertainty resolves in a high-stakes geopolitical situation, markets do not move gradually. They gap, being positioned before that resolution rather than after. It is the entire difference between capturing a generational opportunity and watching it happen on your phone screen while wishing you had acted sooner. Let me tell you exactly what happens in the next 72 hours that makes this window so specific and so urgent. Reports are emerging that a second round of talks between the US, Israel, and Iran could begin as early as Thursday. That is right at the edge of this window. Iran has already shown its hand by rejecting the most recent American proposal. If the second round also collapses, the escalation path becomes significantly more likely and the market will price that immediately. If talks somehow produce a breakthrough, we get a different outcome that I will explain shortly. Either way, Thursday is a forcing function. Markets will react. Positions will shift. The pricing window that exists right now closes. Simultaneously, the IMF growth downgrade released today will ripple through institutional investment committees over the next 48 to 72 hours. Portfolio managers at pension funds, sovereign wealth funds, and large institutions do not immediately rebalance when the IMF cuts its forecast. They convene meetings. They review commodity exposure. They assess hard asset allocation. Those meetings are happening right now across every major financial center in the world. The capital reallocation decisions coming out of those meetings will begin executing in the market within days. Silver will be part of that conversation in every single one of those meetings, and not as a footnote. And then there is China. Beijing cannot simply issue a warning about the Strait of Hormuz and then do nothing if the blockade continues. Every day the blockade holds, China's options narrow and the pressure on Beijing to respond increases. The response menu available to China includes accelerating its treasury bond sales, deepening physical gold and silver accumulation as a dollar hedge, and activating alternative energy agreements with Russia and Central Asia. Every single option on that list puts upward pressure on precious metals. The clock on China's response window is measured in days, not weeks. That clock is running right now. Now let us talk about silver specifically, because the geopolitical picture only matters to you personally if you understand exactly how it transmits into silver price dynamics. This is where Money Insights connects the dots that most financial media leaves disconnected. The first transmission channel is the one everyone can see. Oil at $91 and rising puts upward pressure on every cost in the global economy. Energy inputs, manufacturing, transportation, mining. When inflation expectations rise sharply, hard assets that cannot be printed or conjured out of thin air move up as paper currency. Purchasing power moves down. Silver participates in that inflation trade directly and immediately. This is not complicated and it is not subtle. It is the most basic relationship in commodity markets and it is fully active right now. The second transmission channel is more powerful and less understood. When a geopolitical event of this magnitude unfolds, it does not just cause inflation. It triggers a flight to safety. It causes institutions, governments, and individuals around the world to ask themselves a very uncomfortable question: how much of my wealth is held in assets that could be frozen, devalued, sanctioned, or inflated away by a government in the middle of a military conflict? The answer to that question, historically and without exception, points toward physical assets. Real things. Things you can hold and store without a counterparty, without a password, and without a government's permission. Gold is the most famous beneficiary of flight to safety dynamics, and gold has already been making extraordinary moves this year. But sophisticated investors know something that casual observers consistently miss: when gold moves significantly, silver follows. And when silver catches up to gold in a genuine precious metals bull market, it does not merely match gold's percentage gains, it exceeds them, often by a dramatic multiple. The gold to silver ratio right now is still deeply elevated compared to its historical average, meaning silver is significantly undervalued relative to gold by any measure that history provides when institutional money floods into precious metals during a genuine crisis of the type playing out right now. That ratio compresses, gold goes up and silver goes up faster. That pattern has repeated in every major precious metals bull market of the last 50 years. The third transmission channel is the one almost nobody is talking about, and it may be the most important of all for understanding why this particular crisis is uniquely bullish for silver. The Hormuz blockade is not only an energy supply crisis, it is an industrial supply chain crisis for the green energy transition. Solar panels require silver. There is no commercially viable substitute. Every solar panel produced anywhere on Earth requires silver paste to conduct electricity from its photovoltaic cells. The global solar installation targets for the next decade require silver in quantities that already strain current production rates. Now add a Hormuz-driven energy cost surge to Chinese solar manufacturing, which produces the overwhelming majority of the world's solar panels, and you get a supply-side shock in the single largest industrial consuming sector for silver. That kind of shock does not produce gradual price increases, it produces gaps. At the same time, every Western government watching this crisis unfold is receiving a deafening reminder that dependence on Chinese solar manufacturing is a national security vulnerability. The policy response is already underway. India has launched Operation Urya Suraksha, escorting its own oil tankers through the region because it no longer trusts the system to protect its energy supply automatically. European utilities are accelerating their transition to domestic non-fossil alternatives. American policymakers are being told by congressional voices to invest in domestic manufacturing capacity rather than prolonging dependence on Middle Eastern oil. All of that. New manufacturing capacity, wherever it gets built, requires silver. The demand story was already strong before this week. This week made it urgent. Now let me address the scenario that silver bulls typically avoid discussing, because at Money Insights we give you the complete picture. What happens if the Thursday talks produce a breakthrough? What if the blockade gets lifted, oil falls back to $80, and markets exhale? The honest answer is that silver would likely pull back in the short term as the immediate safe haven bid softens. That is a real possibility that every investor must factor into their thinking. But here is why even a diplomatic resolution does not undermine the silver thesis. The structural foundations that make silver compelling right now existed long before the Hormuz crisis began. The elevated gold to silver ratio signaling historical undervaluation, the surging industrial demand from green energy, the constrained mining supply, the unprecedented global monetary expansion. None of those go away because diplomats reach a deal. What the Hormuz crisis has done is add an acute catalyst on top of a structural foundation that was already compelling. Remove the catalyst through diplomacy, and the foundation still stands. The 72-hour window is about the catalyst. The thesis is measured in years. There is one more dimension to the silver story that I need you to understand, and that is the paper versus physical dynamic that makes this metal unlike almost any other asset in the world. The COMEX, where silver futures are traded, holds a certain amount of registered physical silver in its vaults against that physical silver. There are vastly more paper claims, futures contracts representing entitlements to silver that does not yet exist in deliverable form. In normal markets this works because most futures traders settle in cash and never demand physical delivery. But when genuine fear enters the market, when people stop trusting that the system will function, normally, the demand for physical delivery rises, and when the ratio of paper claims to physical ounces is as extended as it currently is, even a modest increase in physical delivery demand creates enormous price pressure that can move very fast. That dynamic, combined with the current geopolitical environment, combined with millions of informed retail investors who have direct access to physical silver markets through online dealers and trading platforms, creates conditions that the paper silver market is structurally unprepared for. When paper markets are unprepared for something, and forced to confront it, they reprice quickly and without much warning. So what do you actually do right now? If you own physical silver, start by knowing exactly what you have. American silver eagles, Canadian maple leafs, and other government mint coins are the most liquid form of physical silver in a crisis environment. They carry sovereign backing, they are universally recognized by dealers worldwide, and their spreads tend to stay tighter than private refinery bars when markets get volatile. Know which portion of your holdings is most liquid, that knowledge matters when speed matters. Check your storage situation today. A quality safe that is bolted down is the minimum standard for meaningful holdings. Check whether your homeowner's insurance actually covers your metals at their current market value. Most policies have precious metals caps far lower than policyholders realize, and a crisis is not when you want to discover that gap. If your holdings are significant, allocated storage at a reputable private vault eliminates the home storage risks entirely and is worth the modest annual cost. If you have been sitting on the fence about establishing or adding to a silver position, here is the honest framework for making that decision. On one side of the scale, you have a live geopolitical crisis with a specific 72-hour forcing function, a structural precious metals bull market foundation independent of that crisis. Surging industrial demand from green energy policy, historically elevated gold to silver ratio pointing to deep undervaluation, and institutional capital just beginning to reprice hard assets in response to today's IMF downgrade. On the other side, you have the possibility of diplomatic breakthrough providing a short-term pullback, those honestly against your personal financial situation, your time horizon, and your risk tolerance. Then make a deliberate decision, not by defaulting to inaction because inaction feels safe, because in a rapidly moving market, inaction is itself a decision with consequences. For those who want silver exposure without physical storage logistics, the iShares Silver Trust ETF provides direct price exposure through a normal brokerage account. Silver mining stocks offer leveraged exposure to the silver price with the trade-off of company-specific operational risk, streaming royalty companies like Wheaton Precious Metals sit in the middle, offering leverage without direct operational exposure to mining risk. Each vehicle serves a different investor profile, and choosing between them should be a conscious decision based on your goals, not a default. Here is where things stand as we close out today. The U.S. naval blockade of the Strait of Hormuz is active and holding after day one. Iran has rejected the American nuclear proposal. China has issued a direct public military warning. The IMF has cut global growth forecasts this morning, citing this exact crisis. Oil is at $91. Second round talks may begin Thursday and make a lapse again. India is escorting its own tankers because it no longer trusts the global system to protect its interests automatically. European utilities are accelerating their energy transition specifically because of what happened this week. The world is repricing geopolitical risk in real time, and precious metals are historically where that repricing shows up most clearly, most quickly, and most dramatically. The 72-hour window is real. The catalyst is live. The foundation was already strong before any of this happened. What comes next matters enormously, both for the trajectory of the global economy and for the specific financial position of every person watching this video right now. If this connected the dots in a way that is genuinely useful to you, hit the like button right now and share this with anyone you know who holds silver or needs to understand what is happening in the world this week. Subscribe to Money Insights so you do not miss our follow-up coverage as this situation develops in real time over the next 72 hours. We are going to be tracking every development and translating it directly into what it means for your money. Stay sharp, stay positioned, and we will see you in the next one.